Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the host, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
All right. Good morning, everyone. Welcome to Thursday financial planning session. Hopefully, we can deliver some of the best content during the week. But I don't know, Thursday is a tricky day. It's not really a hump day and it's not really a Friday. So let's see what happens. Interesting times. We are mid-Feb. And I think one thing we haven't really covered off on, which is super important, is the reporting season, right? Let's chat about that today. Let's have a look at what is reporting season. And let's have a look at some of the companies that are doing well and some that are perhaps lagging behind. We've got a few people on. Good morning, Kobe. Yep, let's do this. Yeah, let's go Thursday. All right. Morning, Pat. Good to see you, mate. Good to see you. So, all right, guys, let's jump into it. So what do we got? Reporting season. It's basically when the ASX listed companies come out and provide a bit of guidance and an update on their performance and business activities and things of that nature, right? So we typically have two main times when they do the reporting. One is now, so February, the entire month of Feb, you've got companies reporting and providing updates. And the second one is the August one, right? So right now, we are getting the half year results. and the one in August is for the full financial year, right? There's some companies that report slightly different times, just maybe, and the reason for that is because they might have a different calendar year. So their year might finish in December, right? So as a result, you might see an odd report here and there. But typically, Feb and August are the key months for the reports, right? So, well, what do these reports do? Like, what do they provide to us? Well, number one, they provide an update on financials, right? So we can see how the companies are going. Are they making money? Are they losing money? Are they kind of breaking even? What is going on, right? They also give you an update on dividends. So typically the Feb dividend is the minor dividend out of the two. The August one, the one that the full year one, is where you get the bulk of it. So if your companies or stocks paying dividends, well, you should be expecting something, and it is actually a big factor in how it translates into its share price. Sorry, it's still too early. I do have my coffee here, so but we'll get there. So let's have a look. Again, why does it matter? The earnings, dividends. It's a good time to see whether you want to keep that investment in your portfolio, because you're getting a bit of guidance around what's to come. So if we look at broader market, I will dive into a couple of things, into a couple of stocks in a second. But if we look at the broader market, so I've got some notes here. Banks reported they're doing really well. So they're actually recording some strong numbers there. So, and you can see that in the share price. Miners, they are sort of halfway through reporting for most of them, but so far so good. And we will talk about one of them in a second. Energy sector is a little bit flat. They're not really there. They're not bad. They're not good. So kind of neutral. Insurances, the prices of insurance premiums are still rising, so that's a good thing for them. They but all the little crises around bushfires, rain, all of those things, it is having the impact on the bottom lines. Floods, that's what I was going to say, not rain. So retail, consumers, so they are mixed bag. Some are really sort of strong results, but there's some really, really weak ones. So just looking at the my notes here, some strong ones. JB Hi-Fi did really well again. Temple and Webster are sort of struggling, right? So tech, huge conversation right now, especially in the last couple of weeks, being impacted by the AI and all the worry about that the AI will replace some of the tech giants that are currently sitting on the ASX. So if we were to look at actually the top three and the worst three sort of performance so far, I'm having a look here. Obviously, the BHP, very strong results, one of the best in many, many years. CBA, so Commonwealth Bank, again, strong results, crazy amount of revenue and profit there. So again, NAB is another standout. So all the banks are kind of having a really good period in terms of their results and performances. If you think about it, they've had a high interest rate for a little bit longer now, so that's kind of contributing to that result. And again, what are the worst ones? So we've got Temple and Webster. So they do like online furniture, things of that nature. I think post-COVID, these things have started to kind of come down. And with the increase in interest rates a few weeks ago, people are starting to sort of think, oh, do I really need that outdoor setting, or do I need a new couch right now? So, a little bit of that money that you might have had sitting on the side is now being diverted back into the loan repayments. AMP, a lot of you might know about AMP. It's been, around for a long time, had a very horrible sort of last probably 10 years now. But again, they they're struggling. And another one that I'm going to cover off in a second is Pro Medicus, healthcare sector, right? So it's one of those where it doesn't make a lot of sense. You might have heard me in the past when last year I talked about the international stocks and how sometimes the results don't necessarily reflect what the price of that share does. And this is a very, very good example that we're going to go into right now. So let's have a look at let's have a look at Pro Medicus. Let me just share my screen and see what is happening there from a performance perspective. So, all right, cool. You can see my screen. Great. So you can see that sort of last time this year, Pro Medicus was sitting at around $286. And now it's sitting at around sort of $125, right? So sort of more than a 50% drop in the last 12 months. So you can sort of see that, nearly 60% drop in the share price, right? So if I was to say to you the following, right? So revenue. So this is where all of the sales, right? So if your sales grew by 28% or 30% to average it out, would you be happy with that? Probably yes, right? As a business owner, you would be. You're like, wow, my sales are gone up, so amazing. My profit as a result is also looking good. However, no one is happy with my numbers. They expected more. They wanted a much higher sales increase. They wanted a much higher profit, right? So as a result, that's what exactly is happening to Pro Medicus right now. They are in healthcare. The expectations for them was very, very high, and because they missed that expectation, it got sold off quite heavily, right? So, and when it was announced, I believe they were down like 15%, right? So they just reported last week. So, yeah, down 15% on the fact that even though you've done amazing things, you've increased your numbers, everything is looking great, but the market has anticipated more, right? So how much more do you want? So as a result, we've seen that with Tesla last year, where they reported very poor numbers, and then the share price skyrocketed from there onwards, right? So sometimes the markets are irrational, and what you see in the results and what the markets do are two different things. So if we were to actually go across to BHP, well, they've reported really, really well, right? So, and again, BHP historically has been an iron ore play, right? So everybody knows about them, probably hold them in your portfolio in one shape or form. But the narrative has been so far over the last 12 months is that iron ore and China, the biggest buyer of iron ore overseas, has kind of slowed down their purchases, right? So therefore, there was a lot of skepticism around, well, what's going to happen to them? So what BHP did they don't just do iron ore, they do a lot of other things as well. So they've pivoted into other markets. And if you think about it, what has been the main theme over the last sort of, say, 12, 18 months, right? Think about that. What's been the main theme? Well, the main theme has been investments into clean energy. What do we got? The renewables, the infrastructure into storage banks, and all of that requires copper, right? And what a lot of people don't know is that BHP do a lot of other things, not just iron ore, and copper is where they've pivoted over the last couple of years, and now that has become the main driver behind their results. So as a result, you can see that now the share price over the last sort of 12 months is up 30%. So they've now pivoted away from iron ore. It's still a big part of their operations, but now the results show that, well, maybe the diversification piece is working really well for them, which is, I guess, from an investment perspective, we always talk about, don't just have one investment in your portfolio, have multiple. be able to diversify, be able to pivot, right? And this is what BHP is doing currently. And the other thing is, on the back of this, they also increased their dividends, which is another driving factor for the share price to go up. So there's many different factors that. So sorry, 1 second. Let me just stop sharing. So there's many different factors that contribute to the share price, but ultimately, in this instance, BHP pivoted from iron ore, increased their dividends. Results, everyone's happy, so I'm going to buy more. The share goes up. Pro Medicus, basically the same. Good results. Dividends are probably the same. I didn't look at that one, but we wanted more. Not happy with it, so the price goes down, right? So it's a funny time, but it's good to see how the markets react to these news. So be prepared. So especially if you are investing in the equities, and specifically individual stocks, not just the ETFs, but specific stocks. This is the sort of stuff you should be looking at. And typically what I go to the CEO sort of update around, well, what are they looking to do? Are they looking to maintain their current exposure, or they're looking to go somewhere else? These insights are very important, especially if you've been holding something for a very long term, like Pro Medicus, for example. You'd be thinking to yourself, well, I bought these shares 12 months ago for nearly $300. They are just $125 now. Do I sell out of them, or do I keep them? Well, short term, yeah, definitely it's a bad play. But if the numbers are stacking up, and long term you've got there's an aim for the company, then you will likely stay on top of it, and perhaps look at something like dollar cost averaging into the holding again, and perhaps bringing over your overall investment a little bit down. So and then when the share does rebound over time, then you will get your returns much quicker, because you've lowered your average cost price. Another one, again, healthcare is probably not the best area right now. CSL reported again bad results. Who else? Cochlear also was also hit quite hard with the share price. But again, someone there, for example, they are putting something new out to the market. So they're shifting how they're generating their revenue. So the markets kind of, they don't like that. They don't like too many changes without results straight away. And this is what Cochlear is kind of saying, well, we're not going to give you the results right now because we are in this transition period, blah, blah, blah. So as a result, people pulling money out and putting it somewhere else. But anyway, we've got another 2 weeks of reporting. It's super insightful, very interesting. There's literally some areas that were doing amazing 12 months ago are struggling a little bit now, and other areas that were struggling doing the opposite. So it's, yeah, if you're into that stuff, pay attention to it. There's heaps of different summaries that are available online as well. Go through them and have a look if you've got any interest in that. But it's definitely something you should be looking at twice a year, right? So there's always something to be updating yourself on. Feb and August to get you up to date with what the markets are doing and indication of where it might be, because that's where we kind of look at, and that's what we talk to our clients about. These areas are looking like they're about to expand. These areas are looking like they're contracting. So, go through that, and hopefully it makes a little bit of sense. So, Jeff, sorry, mate, missed your message. BHP 2 weeks ago was a nice win. Yeah, that's right. So BHP is flying. So great result for them. Pivot to copper away from iron ore, which is amazing. So look, guys, hopefully this made you aware of what is happening in the stock market. So a bit of volatility. The reason for that is the reporting season. You might see double digits up, double digits down. That's the reason why. So hopefully that gave you a bit of an insight, and I'll see you guys next week. See you later.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.